Welcome back, dear student, to CFA Program Exam Preparation. This is Study Session 5, Reading 13. Today's topic is Intercorporate Investments. 1. Introduction to Intercorporate Investments. Companies invest in the debt and equity securities of other companies for various reasons, such as to diversify their asset base, enter new markets, obtain competitive advantages, achieve additional profitability. 2 basic corporate investment categories. Financial assets. No significant control, ownership less than 20%. Investment in associates. Significant influence over investees' operations, ownership 20%-50%. Business combinations. Control over investees' operations, ownership greater than 50%. Joint venture. Shared control. Ownership percent is only a guideline. Ultimate category is based on investors' ability to influence. 3. Investments in financial assets, IFRS 9, as of December 2012. IASB has updated standard IFRS 9, financial instruments. Effective date is January 1, 15, early adoption permitted. Terms AFS and HTM no longer appear in IFRS 9. Financial assets must meet 2 criteria to be measured at amortized cost. Business model test. Cash flow characteristic test. 3.1 Classification and measurement. All FA measured at FV when initially acquired. Subsequent treatment FV or amortized cost. FA meeting above 2 tests of SEC 4 are generally measured at amortized cost. Management can choose FVPL. Equity investment HFT must be measured at FVPL. Other equity investments, FVPL, or VSI, irrevocable choice. Derivatives are measured at FVPL, except hedging instruments. (3.2) Reclassification of investments. Reclassification of equity instruments is not permitted. Debt instrument reclassification FVPL to amortized cost, vice versa. Only if objective for holding FA significantly affects operations. No restatement of prior periods. From amortized cost to FVPL assets FV, G/L in P&L. From FVPL to amortized cost FV become carrying value. 4. Investments in associates and joint ventures. Joint venture. Ventures undertaken and controlled by 2 or more parties. Equity method of accounting is required, both IFRS and U.S.GAAP. Characteristics of JVS, IFRS. Contractual arrangement B/W 2 or more ventures. Joint control. 4.1 Equity method of accounting, basic principles. Initial investment. At cost as non-current asset. Investees' earnings. Increase investment A/C, non-operating income and vice versa in case of loss. Dividends received. Decrease investment A/C. 4.2 Investment costs that exceed the book value of the investee. Excess of purchase price over book value is allocated to FV of ANL, any remainder is G/W. IFRS. FV or HC, less account department. U.S.GAAP. HC only, less account department. 4.3 Amortization of excess purchase price. Investor recognizes expense based on excess amounts and consistent with investees' expense recognitions. 4.4 Fair value option. Investment A/C at FV through irrevocable election. US-GAAP all entities, IFRS restricted. No prop. Share in B/S. No goodwill, G/L, div.in/B/S. 4.5 Impairment. FV is less than CV. Investment is impaired, B/S fair value, loss I.S, reversal not allowed. 4.6 Transactions with associates. Profit from upstream, investee to investor, or downstream must be deferred until confirmed through use or sale to a third party. 4.7 Disclosure. About ANL and results of equity method. 4.8 Issues for analysts. Higher earnings. Dividend payout is less than 100%. Ratios impact. Improves certain ratios. CF problem. Earnings may not inform of CF. 5 Business combinations. IFRS. No distinction among B.C. U.S.GAAP. Merger A plus B equals A. Acquisition A plus B equals A plus B. Consolidation A plus B equals C. 2. Component consolidation model, U.S.GAAP. Variable interest component, consolidate V regardless of voting interest. Control component. Acquisition method replaces the purchases method and differences B/W IFRS and U.S.GAAP. 5.2 Acquisition method. Both IFRS and US GAAP require the acquisition method. 5.2.1 Recognition and measurement of identifiable assets and liabilities. Identifiable assets and liabilities at FV. Acquirers recognize ANL not previously recognized by acquiree, e.g. brand name. 5.2.2 Recognition and measurement of contingent liabilities. Acquirer recognize contingent liability if present obligation arise from past events. Measured reliably. IFRS. Fair value can be reliably measured. U.S.GAAP. Probable and reasonably estimated. 5.2.3 Recognition and measurement of indemnification of assets. Acquirer recognize assets if acquiree indemnifies. 5.2.4 Recognition and measurement of financial assets and liabilities. Acquirer can reclassify financial ANL of acquiree on basis of certain conditions. 5.2.5 Recognition and measurement of goodwill. IFRS. Partial G/W, PP acquirer's share of FV. Full G/W, FV of acquisition FV of ident.net assets. U.S.GAAP. Full G/W. 5.2.6 Recognition and measurement when acquisition price is less than fair value. Contingent consideration at FV and subsequent changes in IS. IFRS. Difference B/W PP and F.V of acquired net assets immediately in IS. U.S.GAAP. Treatment is same as IFRS. 5.2 Impact of the acquisition method on financial statements, post-acquisition. Financial statements continue to be affected. 5.3 The consolidation process. Combine the results of operations. Intercompany transactions are eliminated to avoid double counting. Difference between IFRS and US GAAP must be considered to avoid inconsistency. 5.3.1 Business combination with less than 100% acquisition. Merger or consolidation acquire 100% equity. Acquisition less than 100%, parent, subsidiary relationship. 5.3.2 Non-controlling, minority, interests, balance sheet. Subsidiaries equity held by third parties. Separate component of equity, both IFRS and U.S.GAAP converged. Measurement. IFRS. Full G.W method. Partial G.W method. U.S.GAAP. Full G.W method. 5.3.2 Non-controlling, minority, interests, income statement. A line item reflecting allocation of P&L. Intercompany transactions are eliminated in full. Impact on ratios would be diff. Under full G/W and partial G/W. Value of non-controlling interest on parents B/S will change. 5.3.4 Goodwill impairment. Impairment test annual or more frequent. Written down G/W cannot be later restored. Impairment loss is separate line item in I.S, both IFRS and U.S.GAAP. G/W assignment and impairment test. IFRS. Assignment cash generating unit. Impairment test, 1 step. Record amount is less than C.V equals loss. Loss reduced G/W and other assets when G/W equals 0. U.S.G.A.P. Assignment reporting unit. Impairment test, 2 step. C.V is greater than F.V equals impairment occurred. C.V, implied FV of goodwill equals amount of impairment loss. Loss reduced G/W but not other. 5.4 Financial statement presentation subsequent to the business combination. Presentation is similar under IFRS and U.S.GAAP. 5.5 Variable interest in special purpose entities. To accommodate specific needs of the sponsor. Transfer A&L from sponsoring companies BS as sale. Improve certain ratios of sponsor by avoiding consolidation. IFRS. Revise the definition to encompass many spec. IFRS 10 is applicable from Jan 1, 13. Spec involved in structured financial transaction will require an evaluation of purpose, design, and risks. U.S.GAAP. More general term V as compared to SPE, IFRS. V includes other entities besides to SPE, IFRS. Spec. Primary beneficiary must consolidate V if controls certain indicators. Entity absorb losses must consolidate if other entity will receive residual return. NCI and V also be shown in I.S and BS. 5.5.1 Securitization of assets. 5.6 Additional issues in business combinations that impair comparability. 5.6.1 Contingent assets and liabilities. IFRS. Cost of acquisition allocated to F.V of AL and contingent L. C.L at F.V, initially, is greater than of amount recognized and amount REQ to settle, subsequent. Contingent assets not. U.S.GAAP, contractual contingent ANL at FV at acquisition. Non-contractual recognize only if meet the def. Of A or L at acquisition. Subsequently C.L is greater than of initial amount or estimate of loss. C.A is less than F.V or future settlement amount. 5.6.2 Contingent consideration. May negotiated as part of acquisition price. Initially measured at F.V either AL or equity, both IFRS and U.S.GAAP. Can also classify as asset, U.S.GAAP. Subsequent changes in IS. Not remeasured equity classified, both IFRS and U.S.GAAP, hangs in IS. 5.6.3 In process R&D. A separate intangible asset at FV, both IFRS and GAAP. Subject to amortization or impairment. 5.6.4 Restructuring costs. Expense in the period the costs are incurred. Not a part of cost of acquisition, both standards. Dear students, our topic is completed here. Thank you everyone. We hope this information is useful to you. If you are willing to continue with these lessons, subscribe to the channel. To find more videos, quickly like and share the videos. You can also ask the question in comments, we will happy to answer. Here is some glossary of words to help in reading.